Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about the most dangerous thing an investor could ever do. And it's the one thing that I would never suggest any beginner in the stock market ever do. I would never suggest anyone to do this. Only, I would say, what the most dangerous thing we're going to talk about, that item, I believe, is only up to someone that's really at a professional level of understanding the markets. And we'll talk about, what level that needs to be and things like that when we get to it. But let's kind of give some context to this. Okay, everything's a risk. When you're involved with investing in general, whether it's real estate, stocks, whatever, you're taking a risk. You're taking a risk. You can definitely lose money. Generally, when you invest in just about anything, there's a 50-50 chance, in the short term at least, that could go up, that could go down in value. So it's about a 50-50 chance overall, especially with stocks. So, investing in a stock, that would be the least risky of any type of, we're only talking about stock market investing, of course, but that is investing in a stock straight up with your own money, that would be the least risky of doing anything as far as investing. But, and of course you could say, well, buy mutual funds, but that's not what we're talking about. We're talking about stock picking and those kinds of things, actual investing, not just throwing money in an index fund or something. So buying a stock is the least risky, but it is still risky because you can still lose 100% of your money. Somehow that company can come upon bad times or whatever, and you can stay invested in it and not get out, and all of a sudden the stock's worthless. That can happen. It's very unrealistic, especially with big companies, that it would happen. And if it does happen in a very short amount of time, it's very unrealistic, but you got to realize that is a possibility. So that's the least risky of stock market investing, but it's still a risk at the end of the day. You can lose 100% of your money. Okay. The next kind of one up, the next tier up, that's more risky would be options. Now with options, you still can only lose, the maximum amount of money you can lose is, if you have $100 invested, the maximum amount of money you can lose is $100. So if you're playing around with options, you can only lose as much as you put in. So if I buy call options on, let's say Apple, and I think Apple's going to $130 next year, and I have call options on that, right? And it doesn't happen, the most I can lose is 100% on that. Now, the problem with options is you're putting yourself under a time frame. So that's why it's riskier than stocks. Stocks you can kind of hold through and hopefully it works out in the long term. An option, you're on a date. So when you buy options or sell options or whatever, you need a stock to be near a certain price by a certain date, or above a price or below a price by a certain price at a certain date with options, especially when you're talking about call options. So if that doesn't happen, if it's not at that price within a month or 3 months or 6 months or a year or 2 years, however much time the options have, and usually the maximum amount of time in the future you can do options for is about 2.5 years. So if there's not at that price by that time, you're screwed. You are screwed, and you can definitely lose 100% of your money. So that's why it's riskier than stocks. There's also a lot more reward in options if you can pick the right company and whatnot. And I play around with options, but at the same time, there's definitely more risk involved than just buying a stock straight up. Next one up, and you would think this would be the riskiest of them all, right? You would think this would be the riskiest, but it still is not the riskiest. And what next one we're talking about is investing on margin. Investing on margin is you can create a margin account basically and invest $2 for every $1 you have. That is the second riskiest thing, and that's something I would say no beginner. I would say options, I would say margin account, and then the last one we'll get to, I would say none of those three things any beginner should mess with. I would say moderate investors can kind of start playing around with options a bit. Moderate investors can also play around with margin a bit. I don't recommend it. I'm not big on margin because I believe it kind of makes you short-sighted and you start focusing short-term, things like that. And if problems happen in the short term to your stock, you can end up having margin calls if you go in too heavy. You have to either funnel more money into your account and those kinds of things. So I don't ever recommend anybody do a margin account. I've played around on margin before and whatnot, and I still have a margin account because you have to have a margin account to do options on. So with that being said, I don't really recommend it for anybody, whether you're a moderate investor, for sure not a beginner investor. It's just highly risky because you're now risking losing more money than you even have. So that's the problem with investing on margin. You're risking now, if you only had $1,000, now you're risking $2,000. So not only can you lose all your money you had in there, you could lose the bank's $1,000 you had in there or your brokerages, and then you have debt you have to pay to them at that point, guys. So that's a huge risk with margin, and that's why it's just a very dangerous thing, especially if you're going in heavy, especially if you're kind of changing your mindset and going short-sighted and some of those things. So margin is very dangerous. It's the second most dangerous thing, but the most dangerous thing a stock market investor could ever do, invest in GoPro. No, I'm just kidding. The most dangerous thing a stock market investor could ever do is short sell a stock. Short selling is only for people that are at a super high level, I would say near a professional level. Now, I don't even mess with short selling. I really don't. And it's not because I don't have enough intelligence to do it. I don't have enough experience, but I just don't mess with it because with short selling, what you risk is you risk an unlimited loss. An unlimited loss. Unlimited. So with investing in a stock or an option, right? You can, especially call options specifically, you have 100%, you could lose 100% of your money. With margin, you could lose 200% of your money in theory. With short selling something, you can lose an infinite amount of money, guys, because you're short selling a position, and then if that stock just starts going up and up and up, and you don't cover that position, at some point you got to cover. Or your brokerage will force you to cover. And you could end up having to pay 10 times the amount, or way more than that even, but let's just assume it's 10 times the amount you shorted for. So you might have shorted only $1,000 and only had $1,000 to short, and the next thing you know, you owe $10,000 or something ridiculous, guys. So that is by far and away the most dangerous thing any investor can do, and especially beginners. Beginners shouldn't even think about short selling. Modern investors, I wouldn't even really push it. You got to really be at a professional level. Reason being is if you are short selling and you're short selling stocks and whatnot, you need to have a very strong opinion on that company and almost know for certain that stock's going down or the market's going down, like almost for certain. Because like I said, there's infinite loss on the other side of the coin. So you got to almost be certain that that company, that the stock market in general is going down. That's a big thing. And really only professional level investors can usually sense those kinds of things. Also, you're going to really need to hedge your position. So if say you're short selling a position, you also should probably buy some long-term call options or even short-term call options month by month that are way out of the money, just in case that stock spikes up super high. At least you'll save some face and you'll make some money on the call options, because call options obviously give you a chance to make a lot more money. So if you're getting killed on your short position, even if you have a smaller position at call options and the stock shoots up, your call option is going to be worth way more money. So you kind of hedged your position, and that's what we call hedging a position. When you're you got the majority of your money into a certain thing, like you're short selling stock, and you got a smaller amount, maybe in a call option or something, so you save face if you're 100% wrong. And then if you are 100% right, you're going to make a ton of money on your major position. You'll, of course, lose all the money on your small position, but that's fine because your major position is what matters in the end. So that's what they call hedging a position. So that's why short selling is not to be played with by beginners. It's not really even to be played with by moderate investors. You got to be high level. You got to understand options very well, and you got to understand stocks very well, and have a very strong opinion on why a stock's going down. Those kinds of things, guys, because the loss is infinite on the other side. So I hope this helped you guys kind of understand the dangers of short selling and how dangerous it can truly be, and kind of just the other things I told you, stocks, options, margin accounts, the dangers of them all, because there's dangers involved with anything investing, especially in the stock market, guys. It's something we shouldn't just focus on gains all the time, because there's the other side of things when you can actually lose money. So it's important to keep those in context and not just think, oh man, I can make so much money in the stock market. It's unrealistic. You got to think about what if things go wrong, because sometimes they do, guys. I hope this helped you immensely today. If you came across this video and you have not subscribed yet, you may want to. We talk personal finance on the channel. I am an entrepreneur, I'm a business owner, and I give away a lot of my business tips. And we also talk the stock market the most in this channel, how to try and be a successful investor. Thank you for watching, guys, and have a great day.